Good morning and welcome to the Killik and Co market update. Last week we talked about how the S&P 500 index had recovered all the losses it had made since Liberation Day on the 2nd of April. This week the index has recovered all the losses it's made since the start of 2025. The reason for the positive move has been a good meeting between the US and China, in which the two sides agreed to pause tariffs for 90 days so that further negotiations can take place. In the meantime, the US will be reducing tariffs on Chinese imports from 145% down to 30%, and China will be reducing tariffs on US imports from 125% down to 10%. Here's the chart showing the performance in percentage terms since the start of the year. The pink dashed line shows the starting point. Note that the S&P 500 is a US index, so this chart here is showing you the return you would have made if you were holding dollars and you had invested in the index. However, we are clearly sterling-based investors, so our returns will be different because of the movements in the dollar-sterling exchange rate. Here's the performance of the S&P 500 for a sterling-based investor. So this chart assumes someone has started with sterling, converted that sterling to dollars on the first day of the year, and then invested in the S&P 500. That person will currently be sitting on a 5% loss because of the weakness in the dollar. To illustrate that, here's how the dollar has moved against the pound this year so far. In early January, $1 was worth 82 pence, but now a dollar is only worth 75 pence. Donald Trump has been touring the Gulf states this week, hoping to put some deals in place. One of the main headlines so far has been an agreement for the US to sell $142 billion worth of arms to Saudi Arabia. Here's a chart showing the trade in goods between the US and Saudi Arabia since 1985. The green bars show the value of imports from Saudi Arabia to the US, and the pink bars show exports from the US to Saudi Arabia. The US has imported a lot of oil in the past, but it has become much more self-sufficient in terms of oil production in recent years, and that's why the green bars have shrunk so much. The US still imports some oil and some other chemical products from Saudi Arabia, and exports to Saudi Arabia include transportation equipment, defense equipment, and computing equipment. Another of the deals announced this week was an agreement for Saudi Arabia to buy more AI chips from US firm Nvidia, which was good news for the Nvidia share price. Here's the 3-year chart. After this week's rise, it's not too far below its record high. And lastly this week, we've been reflecting on the importance of power networks after a very brief power cut in London on Wednesday caused huge disruption to the tube network. Also, 2 weeks ago, there was a big power outage across large parts of Spain and Portugal that caused a lot of disruption. Power demand globally is growing as the world becomes more developed, and also there are new technologies such as AI that require a huge amount of power. This is all putting more pressure onto existing power networks, and at the same time these power networks are having to deal with the transition from fossil fuels to renewable power and the complexity this brings. National Grid is responsible for electricity transmission and distribution here in the UK, and it also operates in the US. The company has been investing heavily in its own network in recent years. The share price has gained about 25% over the last 5 years. As a utility company, it's generally a stock that investors feel relatively comfortable holding in times of market volatility. And you can see in the pink box here that it's held up well during this year's market weakness. On here we have the UK's electricity generation by source since the year 2000. The bright pink and the blue in the middle show the proportion of our electricity coming from natural gas and nuclear, and these have remained reasonably constant over time. The biggest changes have been the decline of coal in the black at the bottom there, and the increase in wind shown by the bright green. Please do give us a call to talk in more detail about our thoughts on power networks. Moving on to have a look at the calendar for next week, we are expecting results out from UK companies Diageo and SSE. That's it from us. Have a great weekend, and we'll see you next Friday.